Let's do some of these moves. Amazon, you bought more. Jim Lebenthal, why?
Bought more. You know, I'm going to summarize what Stephanie said by saying that we're in a no-landing scenario. The economy is roaring. Stock market is roaring. No pun intended, honestly. Amazon's going to do extremely well in that environment on all the fronts, whether it's Amazon Web Services, whether it's the retail operations, whether it's logistics, whether it's some of the smaller shots on goal. And you know what? This is not an expensive stock anymore. It's trading at something like 35 times forward earnings with a growth rate ahead of it that's really quite good. That frankly, you know, if you actually turned off a lot of the investments that they were making, that multiple would be even lower. I think there's a reasonable chance, more than reasonable chance, that they exceed earnings estimates and that you're looking at a stock that on a forward multiple basis is in the high 20s with a growth rate that really justifies buying it here. This has now become a very big position for me. I've bought it in 3 tranches starting in February. From a chart point of view, it is looking like it wants to break out. It's at a price that it first hit about 3 years ago. It's been up and down since then, but it really looks like it wants to break out to new highs.
Anybody else Amazon here?
I'm in Amazon.
Yeah.
Yeah.
What do you think?
No, go ahead.
No.
No, I was going to say, I mean, I think it's a great move. It's our second largest mega cap stock. I think Jassy is firmly in the seat, you know, from a leadership perspective, and they're doing a great job with operational margins. They're growing at 40% year over year. So I like the name, and I like Jim's call here.
Steph?
No, I like it very much, but I've been actually taking profits in it because I'm up a lot, and I've been putting it into Apple. And now Apple's up 18% from the lows, which worries me a little bit about Monday because expectations are really high. But I do think we're on the cusp of an AI theme for Apple, and it's really not expected. Or it's expected, but it's not appreciated, especially given what the stock action has done. And so I like Amazon very much. I'm going to hold on to it. I'm a little underweight relative to my bench. I'm much bigger in Apple. And on any weakness on Monday, I'm a buyer of Apple.
Okay. Yeah, we'll be there live, by the way. Just a reminder, broadcasting live from Apple Park for WWDC. You've been busy, too. Steph, you bought Seagate.
Yeah.
Is that a new position?
It's a new position. I've never owned it, actually, but we are hearing about green shoots in the PC refresh cycle driven by AI, but just driven because we haven't upgraded our PCs in about 4 or 5 years. And so we heard from Dell, their PC business was actually up 3% versus expected down 2%. HPQ, for the first time in 2 years, is going to see growth in the second half of the year, 10% half over half. We also have seen or heard from AMD on Sunday at the conference. They were talking about how their AI PC chips are 5 times the speed of existing PC chips. So I've got very excited about all 3 of those things. I own CDW, which, by the way, got upgraded today because it's down 13%, in my opinion, which is overdone. But I wanted to have even more exposure because Seagate is the leader in the industry. Gross margins are poised to go higher, and they could see gross margin expansion as much as 1,000 basis points year over year. They've got pricing power, and volumes are going higher. So might be early on it, but I'd rather be early and really appreciate this theme in the second half of this year into 2025.
Jim, you bought more BlackRock. A lot of conversation these days about certain parts of the financials working and others not.
Yeah.
You clearly think this side of the financial spectrum is the place to be right now?
Well, I've got a lot on the money center bank, the so-called other side.
I know you do, but that's where the questions arise because of concerns about economic growth and yields and which direction they go, having a more direct impact on the money center banks, maybe more so than some of these other kinds of names.
I mean, we've got one heck of a strong economy here. We've got a financial market, not just stocks, but bonds are actually doing pretty well. A lot of commodities. That's really reflecting the strength in the economy. By the way, the economy globally is starting to look a little bit better. All of this should increase asset prices, which is where BlackRock's going to make its money. Assets under management going up and the fees on those assets under management going up with it. To the point, Scott, that I think you were pointing at, you know, the stock has kind of languished the last few months. It really hasn't done much, and I think that's a setup for the next leg higher. I think this is the classic case of where the puck is going.
Barclays today talks about valuation of the market, Liz. I mean, they say tech PE is extended and that all other sectors are cheaper. I don't know if, you know, it's hard to, you know, argue against that. In terms of other sectors being cheaper, of course, they're cheaper than tech. But what about your opinion, not mine, yours, on whether you think the PE of tech is extended?
Well, I do broadly think it's extended. I mean, the run that we've just seen in semiconductors this year has been colossal. So it is extended. But then what happens is people start to talk about comparing it to the early 2000s. it's not that extended. It's not at a point where it's screaming extremes, and the index broadly hasn't hit a point of entirely overbought. So I don't think we're at a level that tells everybody decisively everything is overvalued. There are certainly other sectors that are more attractively valued when compared to tech, and there are sectors that are more attractively valued when compared to their even long-term averages. And I think you can start to play in some of those. I do think that if the economy stays strong and if investors keep their risk appetite high and stay in equities, we will see another rotation where people start to take gains in those large cap tech names and put it into some of the other sectors that haven't kept up, especially in the last couple months.
Similar kinds of notes. A note today that's similar to many of his previous ones from Tony Pasquarello, Goldman. I certainly would not be looking to stand in the way of this freight train. He's talking about the Magnificent Seven, obviously. One that is fundamentally rooted in totally superior earnings growth. You want to take a shot at that?
Yeah.
I mean, he's been right. He has been right. And I would agree there. I think, for me, as I look at the Qs, I mean, the Qs are kind of kissing that 70 trend line on the RSI. So clearly we're getting very close to overbought territory. And I would say, too, I mean, to Liz's point, I mean, whether it's the semis, whether it's been mega cap, obviously all these names have performed very well, but their earnings have been supportive, and that's why you see the price action that we've seen. But, going forward, I mean, we've had conversations early part of the year about the broadening out. I mean, that's healthier for our markets, and that's what I hope to see in the second half of this year. And I think it's due for a small pullback likely over the next couple of weeks.